Hello and welcome to Ticker Tapes. It's Monday, so that means FAANGs are on the agenda again. Amazon struggled last week, trading down by 1.29%. Maybe we shouldn't read too much into this, as its stock price is up 25.85% over the last month. That said, Latin American e-commerce rival Mercado Libre has rallied by an impressive 56.45% in that period, so everything is relative. In terms of news flow, there has been little of note, though traders will have registered the success enjoyed by Disney's Disney Plus streaming service, which may well have won some market share from Amazon Prime Video. Amazon has also fallen foul of European regulators once more, with the company being fined approximately $3.4 million for breaking Spanish labor laws. This was the second time in 2 years that the firm has been sanctioned for this type of offense. Meanwhile, the Federal Trade Commission, or FTC, is planning new rules that would boost online privacy protections, according to the Wall Street Journal. Such rules would make companies responsible for the consumer data they handle and would ban certain data gathering practices. At the same time, Congress is set to consider legislation that would give Americans far greater control over their personal data. And though such measures may take a couple of years to come to fruition, they would have implications for all the FAANG stocks, with Alphabet, Meta Platforms, and Amazon likely to be the most affected. Apple assembly partners are expected to make 220 million iPhones over 2022, of which 90 million will be new variants, according to Bloomberg. That level of production would be on a par with 2021 levels and reflects Apple's recent comment that supply constraints were easing. Apple has delayed the launch of the next generation of iPad OS software by around a month. The update is now expected to go live in October, when Apple could also launch new iPad models. JP Morgan wrote on Netflix this week, highlighting the bounce in the stock since it reported Q2 earnings of some 16%, saying the narratives around the stock had changed now that the company had embraced an ad-supported subscription tier and paid sharing plans. Analysts at the bank believe that Netflix is now more focused on revenue growth and generating higher free cash flow, and that the company will keep its production budgets and spending under control over the next couple of years. JP Morgan has a neutral rating on Netflix and a price target of $240 per share, just below the current share price. Teenagers are leaving Facebook in favor of TikTok and YouTube. That's the conclusion of a survey conducted by think tank Pew Research Center. TikTok is the most popular social media service among 13 to 17-year-olds in the U.S., with 67% of teens saying they have used TikTok, 16% of whom say that they are constantly using the video platform. Teenage use of Facebook has fallen from 71% to just 32% since 2015, though there is some good news for Meta Platforms in the survey, which showed that Instagram is the second most popular social media among the teenage audience.